Welcome to our terminology workshop. This is where we demystify the terminology involved with the stock market. One of the things I learned across a number of industries that I've worked in is that language is truly the differentiator. Think about it. In IT, when people talk about terms like network configuration, CPU, RAM, version control, most people didn't know what that meant, and that kept them out of IT. The same thing happens in finance. People are intimidated by the numbers, so much so that even most business owners don't even do their own financials. Finance is the heart of any business, so it is essential that you understand. So we're going to take this workshop and I'm going to break down a number of the terms used in investing. Because once we get through those terms and understanding the terminology of investing, we're able to progress forward and start and being able to apply the principles that we learn in investing. So join me as we go on this journey. I'm going to put a lot of information on screen, so you'll hear my voice in the background, but I'll be here providing instructions and leading the way. The first cluster we're going to talk about is market measurements and indexes. And I group things into clusters so that they will have like similarities. The first term is exchange. An exchange is a marketplace where stocks and other investments are bought and sold. So you may be familiar with two already, the New York Stock Exchange and the NASDAQ. The New York Stock Exchange older, and you kind of remember some of the people who were calling buys and sells on the trading floor. That's the exchange. The next term is the Dow Jones Industrial Average. Now that's more of a collection of well-established companies that are grouped together in somewhat of a fund so that you have indication on how the economy is doing. So when they say the Dow is up 200 points, that may give you indication that the overall economy is doing pretty good. Whereas if they say the Dow is down 500 points, then the overall economy may be down. Now, it doesn't encompass all industries, but it tries to give a well balance so that you have some perspective. The NASDAQ is another term that we'll talk about, and that's another index that's heavily weighted towards technology stocks. So when you hear the NASDAQ went up, it tells you that, hey, technology is performing pretty well. Or the NASDAQ went down, then that may mean that, hey, technology isn't performing well. And there are a lot of stocks that are interconnected. So if technology is down, you may notice other industries are also down because they're reliant on technology. The next term are index funds or ETF funds. ETF stands for exchange traded funds, and they make up multiple stocks in specific categories. For instance, you might want to buy an AI ETF, and that would be made up of companies who are focused on artificial intelligence. They group all those companies in one fund so that you can invest simply in AI. Or they may have a finance or a banking. They have a number of ETFs for a number of industries. The next term is kind of two terms, a bear market and bull market. And you've heard of those, and you've probably seen some icons and symbolism that represents that. A bear market means that the market is not doing very good at all, whereas a bull market means that the market is generally rising. So that's the first cluster of terms that we're going to talk about.